This video is my complete 2024 crypto playbook. So if you are new to crypto, or maybe you already have some knowledge but you try to watch some other videos and you found them a bit confusing or overwhelming, or maybe you just simply feel like you missed out on Bitcoin and you don't want to miss out on another opportunity in this space, well, this video is exactly for you. I will cover absolutely everything you need to know to be successful in the crypto space. So basically it's a bit of a checklist. If you can tick off all the boxes, it means that you are fully prepared for the next crypto bull run and you can really take advantage of all the opportunities that will be coming in the coming months or next couple of years. I'm Andy and this is Crypto Like a Pro, the channel where I talk about crypto, NFTs and everything Web3 related. First of all, don't be put off by the amount of content in this video. If you are interested in just the basics, go through the first few points and you'll be absolutely fine. I will indicate which elements are the most important. But if you want to be really prepared, go through everything because that's how you can really take advantage of all the opportunities that will be happening in this space. The thing with crypto is that this space is moving really, really fast and it's all about being early. So if you will try to learn during the bull run as things are happening, you'll be always one step behind. That's the mistake I made in the previous bull run, especially early stages of it. I was still learning a lot of this stuff and constantly catching up. And I was always this one step behind, which then meant that I missed out on a lot of opportunities. It may make a difference between making profit or not making a profit, or making very small profit or making like 10x or 20x gains. So it's really, really important that you are properly prepared. The second important point is that this video is focused on what you need to know, not how to do it. It would just simply take too much time if I wanted to do step-by-step guides for every single thing I will cover in this video. However, in the description I provided links to my other videos, all the relevant websites, so you can find all necessary information. And if you would like to take a shortcut and learn everything just in one place and in as condensed version as possible, you can also check out my courses and you can also find them in the description. Okay, let's crack on with the actual content. First of all, if you are watching this video in early 2024, you are still early to the crypto bull run. Yes, the whole space has been pretty crazy over the last few weeks, but we are still in very, very early stages. If you look at this chart, and that's Bitcoin to US dollar, you may feel like you already missed out on quite a lot, right? Because not that long ago, Bitcoin was trading around $15,000 or $20,000. And now it's holding quite firmly above 40,000. And of course, if you look at it, it's been climbing up quite steadily over the last few months. However, it's important to acknowledge where we are in a bigger market cycle. This phase right here, those last few weeks, when we had this climb from like, let's say 25,000 all the way to 40 something, that's actually very similar to where we were right here in the previous market cycle. You see, we are currently around 4 months before the Bitcoin halving, which is likely to happen at some point in April 2024. Last Bitcoin halving happened 4 years ago in May 2020, so somewhere around here on the chart. Of course, we had COVID dip here, which messed up things a bit, but if you think about where we were at this point in the previous market cycle, so that would be early 2020, well, that's this part of the chart right here. That was before COVID properly kicked in. So that was basically the path crypto was likely to keep following if COVID didn't happen, if that makes sense. And actually, this is very similar to what we are seeing right here. And if you think that this move was much smaller, well, let's actually zoom in and look at the actual numbers. So we'll get rid of all this bull run values because that's taking everything out of context a bit. So basically, we're looking at this part right here. So towards the end of 2019, Bitcoin was trending somewhere around $7,000. And then in early 2020, it started climbing up quite rapidly. And if you think that this move is quite small, well, let's look at the actual prices. We started around, well, let's say $6,500. and went up to about 10,500, around 55%. Now, if we move to the current part of the market cycle, so again, we were trending sideways for quite a bit, and then we had this move up. That's something like 25 to 40 something, 42,000, around 70%. Okay, that's quite a bit more than 55% or so, but it's a relatively similar move. Now, here's the next important thing. Bitcoin was sitting around 10K and then went up to 70K at the top of the market cycle. So it did about 7x. So considering that we are still in this phase of the market, well, Bitcoin has still a lot of room to go. It will not do 7x in this market cycle. This is not quite how it works, but it's quite reasonable to think that it will still go up 3, 4, maybe 5 times up from the current price, which on one hand is great because it means that we are still early. There's still a lot of room for Bitcoin to go up in value. But at the same time, it also means that if you want to make a lot of money in crypto, which, well, let's be honest, that's why most people are in the crypto space, you're not going to hit it big time with Bitcoin. Yes, you can double or triple your money, maybe a bit more, but that's about it. So essentially you have to put a lot of money in order to get some decent return on it. If you want to get really good return on your investment, you will have to look at smaller cap altcoins, essentially tokens which are nowhere near as popular as Bitcoin or even Ethereum. They have currently lower market cap, so there's less money in that token, and therefore they have much more potential to grow. So the first important skill you need to have is the ability to find different tokens and all the necessary information about them. So let's say that you heard about a token from someone. You need to find out a bit more about it, not just what's its current price, because frankly, that's largely irrelevant. But more importantly is what its market cap, how the price changed over time. Is it currently quite expensive or not? What is the project about? At what stage it is, and so on. And you can find all this information on one of those websites, either CoinGecko or CoinMarketCap. They are pretty much the same. Personally, I find CoinGecko to be a little bit more user-friendly, but you can pick your favorite. It doesn't really matter. The information is like 90% the same, and there are just small differences between the two. And what you have here is the whole list of all cryptocurrencies, or almost all cryptocurrencies, by market cap, so by market capitalization. Market cap is far more important than the price of a token because, well, the price is something that fluctuates over time, but you cannot really compare one token to another. Bitcoin currently trades at $42,000, while Ethereum at $2,000, but it doesn't mean that Ethereum will go up to $40,000 or, I don't know, Cardano, which is only a little bit further down the list, which is currently trading at 60 cents. Well, it doesn't mean that, oh, it's only 60 cents and Ethereum is $2,200, so Cardano can go up to the same value. It doesn't work like that. What's important is the market cap, market capitalization, so the number of tokens on the market multiplied by their current price, because this gives us much more clear picture of how much this token can grow in value. So for example, Bitcoin currently at the current price has market cap of just over $800 billion. As you can see, Ethereum, the second one in terms of market cap, has 276 billion, and then the numbers are dropping down quite rapidly. But if, let's say, you are interested in, well, let's go with Cardano. That has just over 21 billion. If you want the price of Cardano, or if you expect that the price of Cardano will double from 60 cents to $1.20, that would mean that another $21 billion would have to go into Cardano for the price to go up. So essentially, that means a lot of money has to come to this token. And that's why it's impossible that Cardano can hit, let's say, I don't know, $1,000, because there would just have to be trillions and trillions of dollars going into it. That's just not going to happen. However, if you're going to pick something like, I don't know, Let's pick one of my favorite projects, something like CDFI fund, which is relatively small, which has a relatively small market cap. That's only about $200 million. It's still not tiny. Some of them, they may have market cap of like $10 million or $50 million. But as you can see, for CDFI price to double, it would require only additional $200 million or so. Well, that's much more achievable than 20 billion, right? So CDFI can potentially do 10x from the current price, because that would only require about $2 billion, right, for the price to go up 10 times. Okay, $2 billion, it's a lot of money, but if you compare it to other cryptocurrencies, well, it's actually not that much. And also you have to bear in mind that those prices are still in, well, relatively bearish conditions. The market is heating up, but this is nowhere near how the market looked like back when everything was pumping like crazy back in 2021. It was perfectly normal for even sometimes quite mediocre projects to hit valuation of around 1 billion or above. So these numbers, billion, 2 billion and higher, are not ridiculous. It's entirely possible that projects may hit them. And one strategy you may want to consider is investing in different tokens with completely different market caps. So you may want to go for one of the large market cap projects because they are very established. Sure, you're not going to make ridiculous amounts of money on them, but they can still go into few multiples of their current value. And they are relatively safe as far as cryptocurrencies go. But then you can also add a few of the mid cap and low market cap. So let's say something around maybe $1 billion and some projects around like 200 million or $50 million in value, because those can do like 10x, 20x and more potentially. But of course, at the same time, they are much more risky. Now, what else you can learn from CoinGecko? Well, if you look at any of those tokens, let's start with Bitcoin. You can see, of course, its current price, market cap, fully diluted valuation, which is really important because you want this number to be as close to this one as possible. Basically, currently there are 19.5 million Bitcoins in circulation. There will be only ever 21 million. As we know, Bitcoin is being released very slowly or mined very slowly. So it will take quite a while to hit this number. But you will find some projects where these numbers are very, very different. So basically, market cap is the current supply of the token multiplied by its price, and that gives you this number. Fully diluted valuation is the maximum supply multiplied by the price, and that gives you this number. You will find that some projects, especially in their early stages, may only have about 20 or 30% of the tokens currently in circulation. So, for example, this number may be like 3 or 4 or 5 times higher than this one. And that's not necessarily a red flag, but it's something to be aware of, because you need to know when those additional tokens will hit the market. With Bitcoin is very slowly being mined. So not only currently most of the supply is already on the market, but we also know that that remaining 1.5 million Bitcoins will be mined very slowly over quite a few years. With other projects, you may find that, for example, the team who founded the project, they all got some tokens as part of their payment for working on a project. A lot of influencers, advisors, and so on maybe also got some of those tokens. But very often these tokens are locked for a certain period of time called vesting period. So it may take like 6, 12 months, sometimes a few years before the owners of those tokens can sell them. So you need to know when those tokens will hit the market. And you can find this information usually on the project's website, because you don't want to be getting into the project just before the next batch of tokens is released to the market, because essentially that usually means that the price will dip because a lot of people will sell them. All this information here is really important. You can find more information about the project, explorers, so websites which give you information about all the transactions on that network, some of the crypto wallets that support particular coin, a bit about community and so on. all this stuff is kind of less important unless you want to properly research a project. And then of course you can also find here the price chart, and you can look at various periods, and also you can further adjust it here at the bottom to narrow it down to the period you are interested in. So if you don't want to use something like TradingView because it's a bit of an overkill and it can be quite confusing, or you don't want to set it up for yourself to start with, something like this is perfectly suitable. You can find all the information about the price action that's necessary. And also some more information here about the price. The bits which you will find most important are the all-time high and, well, potentially also all-time low. Of course, in case of Bitcoin, well, all-time low, that's not actually the all-time low because it's only tracking the price from 2013. But nonetheless, of course, Bitcoin went up massively in price. But you can also see that currently it's down almost 40% from the all-time high, which means that, well, it's still pretty good price to buy. Generally speaking, you want to buy a token when it's below its all-time high because you know it has potential for growth. It's of course not guaranteed, but well, at least you know that it hit certain price point before, so it may hit it again or go beyond it. If you're buying at an all-time high or very close to it, then of course that's much more risky because no one really knows how much further this token can go. You can also look here at Bitcoin market, so essentially where Bitcoin is traded, so various exchanges. There are many, many more. I mean, it's Bitcoin, so of course it's extremely popular, but in case of some other tokens, this list will be much shorter. So I will show you a different example, and again, we'll use CDFI for that. I've already mentioned its market cap. Fully diluted valuation is 350 million, so quite a bit more than the current supply. As you can see, there's still a lot of tokens that will be unlocked over time. But in the case of this project, it doesn't bother me too much. Also, sort of 1 to 2 ratio is not too bad. It's only when these two numbers are like completely far apart, then you may need to worry about it a little bit. But yeah, that doesn't bother me in this case. Information here, you can see here contract address, which you couldn't see with Bitcoin. And that's something really important because when it comes to some tokens, they are like the main tokens for the blockchain. So Bitcoin is one, Ethereum is another one, Binance Coin, BNB, that's another one, and so on. They're like the main blockchain coins. And then within that blockchain, there can be many different tokens, many different cryptocurrencies. And you need to know on which blockchain that currency exists and what its contract address. If this doesn't fully make sense, don't worry, I will put a lot of resources in the description. And also, like I said, you can check out one of my courses when I explain or in much more detail and show you practical examples. But what we can see here is that this exists on a Binance Smart Chain. This icon indicates that, and that's the contract address. So you can copy it if you need it in the future, and you can then add it to the MetaMask if you want to trade this particular token or to make sure that you're actually trading the correct token. Again, if this doesn't fully make sense, don't worry. As you go through this video, it will all eventually click. You can also check here on which other blockchains this token exists. So it exists on Binance Smart Chain, but also on Arbitrum and also on Ethereum. So it exists on multiple blockchains, but it may have a different address on different blockchains. So it's always important that you get the correct address. You can find out more about the project itself and so on. And then here, when it comes to the price, as you can see, in the case of a token like this, it had this massive spike in the previous bull run. It crashed a lot and it started picking up quite nicely. And if you watched one of my recent videos, you know that I quite like projects like this because there was a lot of, it shows that there was a lot of faith in this project in the previous bull run. Then of course the price crashed and was down like 98% or 95% throughout the bear market, as most projects did. But now it's picking up very strongly. And that's something you want to see. You don't want to see a project which is just flatlining, even in this phase, because, well, you don't know whether it's going to pick up or not. Especially when you're starting out, you don't want to risk investing in such projects. But when you see that there is some life in it at this stage of the market, well, there is pretty good chance that it will go back to its previous value. This is by no means guaranteed, so please don't purely rely on a chart like this and assume that, oh, it started moving now, so it will definitely hit this value. It's not guaranteed at all. But it's a pretty decent indicator that this may happen. And as you can see here, this project is still down almost 80% from its all-time high. So even though it started picking up quite a lot recently, well, it still has a ton of potential for growth. So, and low market cap. So yeah, that's something essentially I'm looking for when I look at projects. It's a much more risky project than, let's say, Bitcoin or Ethereum, of course. But at the same time, if you want to have those more risky tokens in your portfolio, which have a lot of potential for growth, that's an example of what you may be looking at. And then here, if you look at the markets, you will see that there are definitely fewer markets than in case of Bitcoin. There's still quite a long list. But again, you want to see the trading volume over the last 24 hours on which exchanges there's a lot of those tokens being traded, because otherwise, if there is not enough volume, let's say, I don't know, you want to trade it on an exchange where there's only 18,000 of those tokens being traded, and I don't know, let's say you have 10,000 that you want to sell, $10,000 worth of tokens you want to sell, then of course that would be really difficult to do with such low volume. You would need to sell it on one of those bigger exchanges where there are millions of dollars of that token being traded. Hope it makes sense. So that was probably the longest and the most important part of this video. You need to know how to identify projects with potential and what this potential may be. You don't want to be just relying on people telling you that, oh, this project will do really well. It's like, yeah, based on what? You need to be able to assess this information yourself. So sure, I just said that I like CD5 Fund and I think it has a lot of potential for growth. And I explained why I think so. But also, well, at this point, you should look into what this project actually does. At the moment, it's just my opinion, right? I'm just a guy on the internet who says that he likes this project. What you really want to do is make sure that you know why you may be interested in investing in this or that or any other project based on the information presented in CoinGecko, on the project's website, and so on. And you can also go to the project's communities on Discord or Twitter or Telegram, and then talk to the people from the project team. Great thing about crypto is that a lot of those cryptocurrencies are still in relatively early stages. So it's still entirely possible to actually talk to the project devs, often to the CEOs and so on, because the communities are relatively small and you can find out much more this way. So that's one element, really, really important one. But now, well, how can you actually buy crypto? And then more importantly, how can you buy some of those more obscure tokens? Well, first of all, you will need an account on a crypto exchange. And actually, I would suggest that you set up at least 2 or 3 accounts, maybe even more, because some crypto exchanges are more reliable than other ones when it gets really busy, when everyone is interested in crypto. Sometimes there may be delays with the exchanges. It may take a lot of time to get your account verified and so on. So you want to make sure that you do it all well in advance. So when everyone will be jumping into crypto, you already have everything set up. And also, well, unfortunately, those exchanges sometimes just go out of business. Maybe you heard about FTX, huge cryptocurrency exchange which collapsed back in, I think it was in 2022. It was really scary because it was one of the biggest exchanges and yet it still collapsed. The thing is that just because you have an account with an exchange, it doesn't mean that you have to put your crypto at risk. You basically only use the exchange to buy cryptocurrency and then you ideally want to transfer it to your own crypto wallet. So even if that exchange goes down, your crypto is safe. And that's why you want to have multiple accounts. So you can then move that crypto to another exchange and sell it there if you want to. Of course, which exchanges will be available to you will depend on the country where you live in. It may also depend on your situation, on what the exchange requires from their users and so on. It not only varies on a country by country basis, but it also keeps changing quite rapidly because there is a lot of new regulation being introduced when it comes to crypto. So yeah, make sure that you keep up with all this information and also check what's available in your country. Some of the most popular ones are Kraken, and this one is available in a lot of countries. There is also Coinbase. Binance is another popular one. There's also BitBuy, Crypto.com, and many, many others. The next thing you will need is a way of funding that crypto account. So depending on the exchange you choose and the country where you live in, there may be different options. So it may be possible to just buy crypto with your debit card or credit card. It may be a bank transfer, or there may be some other different options available to you. Again, you will need to check it with your specific exchange. And also it may vary depending on what kind of information you provide to verify yourself as a client. I would say that if possible, test it with at least 2 different bank accounts. If you only have one bank account, then well, it's entirely up to you whether you want to open another free one or something like that to test it as well. But what I found in a previous bull run is that even though I was a client of my bank for many, many years, when it came to crypto, quite often my transactions were blocked. So for example, I wanted to send some money to the cryptocurrency exchange to buy some more Bitcoin or some other cryptocurrency, and the bank would block this transaction, and I would have to call them and verify that yes, it's definitely me. Yes, I know what I'm doing. No one is trying to scam me. I've done this before, and so on and so on. It can be really frustrating and you can lose a lot of time this way. But this is how banks currently operate. Quite often when it comes to crypto, they are, well, very often they're actually not entirely sure what they should do with it, or they assume that someone is trying to scam you. So they may be blocking your transactions or delaying them and so on. And like I said earlier, when it comes to crypto, it's all about being early and acting fast. So you have to be prepared in advance for all this stuff. So make sure that you test that you can move money to the exchange and back. And it doesn't have to be a huge amount, right? Doesn't matter how much you want to invest in crypto. Just test it with like, I don't know, $50 or something, just to see that everything moves correctly. And also it will give you later much more confidence knowing that, okay, you bought this crypto yourself, you know how the whole process works, you then sold it and the money came back to your bank account. Yes, you will lose a little bit on like transaction fees and stuff, but those few bucks are totally worth it. The next important point is setting up your own non-custodial crypto wallet. What does it mean? Well, essentially it's a wallet which allows you to store all your crypto and you have the full control over those assets. You can, of course, just keep your crypto on the cryptocurrency exchange, or a lot of apps now allow you to buy crypto like PayPal or Revolut, at least in some countries. But the problem with those solutions is that it's a bit like having your money in the bank. Yes, in theory, it's there, it's safe, but you don't have full control over it. I mean, you have control while things are going well, but if the bank was going to collapse, or if, I don't know, there was suddenly some political unrest and the government would block access to the money, well, there's no way you can withdraw it, or your withdrawals may be limited. It's, of course, unlikely to happen, but the principle is exactly the same when it comes to crypto. If you have a big exchange and you store all your crypto there, you may think that it's safe because it's a big established exchange, but well, we saw it with FTX and there were some other examples in the past that exchanges can go down. And if all your crypto is there, well, it may be lost or partially lost. It's certainly not something you want to go through. The great thing about crypto is that you can store it in your own crypto wallet. Yes, you are then 100% responsible for it, so you cannot lose your password and so on. And of course, if someone hacks you, then, well, you lose all your crypto. But as long as you don't mess it up yourself, you have full control over your assets. So even if an exchange goes down, you don't care because you already withdraw all your crypto to your wallet and then you can sell it on another exchange. Again, that's why it's important to have multiple accounts on multiple exchanges. So what kind of wallet do you need? MetaMask is by far the most popular one. And if you're planning to invest in altcoins and more obscure altcoins especially, you will definitely need it because it's not only a way of storing your crypto, this is also your gateway to the whole Web3. This is how you connect to different websites to swap tokens, so exchange one cryptocurrency for another, or to buy NFTs and, I don't know, play crypto games and so on and so on. So it's your wallet, but it's also like your master key, your master password to everything Web3 related. And it's perfectly normal to have multiple crypto wallets and have multiple accounts within those wallets, but that's kind of separate thing. Most important thing that you install MetaMask and you learn how to use it. Again, if you're not sure where to start with it, you can check out my other video. I just created a new one for MetaMask in 2024 because the software changed actually quite a bit over the last few months. And also you can find it in one of my courses. One of the most important thing about MetaMask is that you go to this website, metamask.io. Don't go to any other website, don't download it from anywhere else. Make sure that you actually download the legit software wallet, because that's one of the most common scams, unfortunately. People click on some random link, which takes them to a fake website, and then they download the wallet, which basically is set up so a hacker can just withdraw the funds without the owner's permission. The only potential downside is that certain cryptocurrencies only work with specific wallets. So I mentioned before that there are multiple blockchains. Like Bitcoin is a cryptocurrency, but it's also its own blockchain. Ethereum, or technically speaking Ether, is a cryptocurrency used on Ethereum blockchain. And these two don't talk with each other. They're called blockchains or networks and are completely separate. There are also many other ones like Solana, Matic, or Polygon, and the token is called Matic. Cardano, it's another very popular network, and the token is called ADA, and so on and so on. So for example, for Bitcoin, you will need a separate wallet. If you want to use Cardano, you will need a separate wallet. That's Yoroi or something like that. Solana needs a separate one called Phantom, etc. So that's something you also need to explore, what cryptocurrencies you want to use, what blockchains you want to use, and download all those wallets. So for example, you have MetaMask, which will cover most blockchains, but then if you want to use Solana, you may want to install Phantom. If you want to use Bitcoin, there are a few different ones, but I would suggest that if you're planning to use crypto a lot, sooner or later you should get a hardware wallet. Ledger is one of the most popular ones. Well, probably the most popular one, actually. There's also Trezor, there's Keystone. There are many different ones, but they all do the same thing. Basically, it's an additional layer of security, and they also come with their software wallet, but you need the hardware in order to approve any transaction. So basically, anyone can deposit crypto into your account, but to withdraw it, you need the hardware to actually approve it all. If you don't mess stuff up, this makes it 100% safe from any hacker attacks or anything like that. Basically, unless you let someone access your ledger, either remotely or in person, it's 100% secure. So if you're planning to invest more in crypto, it's definitely worth it. It will cost you like, I don't know, about $100-$150, but it gives you that additional layer of security. So it is really, really important sooner or later to get a ledger. Next, you will need to learn how to actually buy and sell crypto. So you may already be familiar with doing this on an exchange, but the important thing is that a lot of the tokens, especially those lower cap tokens, may not be available on popular exchanges. That's something I didn't know when I was first getting into crypto. I wanted to buy a token, but then I went to my Coinbase account and it's like, it wasn't there. There was no option to buy it. You may be able to find it on another big exchange, but in some cases, you won't be able to find on any of them. And you'll be only able to buy this token on decentralized exchanges or DEXs. And one of those is Uniswap. Every blockchain has its own exchange or multiple ones. So Uniswap is probably the most popular one on Ethereum blockchain. If you want to trade tokens on Binance Smart Chain, it will be PancakeSwap. There is a different one for AVAX and so on and so on. What you need to do is, well, you need your MetaMask and then you just connect it here. And basically then you are able to trade tokens. So you can have Ethereum in your wallet and then you trade it for some other token, even really, really obscure one. And you do it by going to CoinGecko Let's say I'll pick something like Veracity. It's actually quite a popular token, but let's just assume that it's not. You go to CoinGecko, you look up the contract address, you copy this address, and then you paste it in Uniswap. And then you know that you are buying this specific token. Don't try to just type in the name, because there may be fake tokens, there may be multiple tokens with the same or very, very similar name. Always make sure you copy the contract address, and then you can trade that particular token. Again, if this doesn't make much sense, don't worry. Check out my other videos, check out additional resources or the course, and everything is then explained step by step. It's really straightforward once you do it a couple of times, but when you have to do it the first time, it can be a bit scary. Remember that whenever you want to do any transaction when it comes to crypto, you will always pay a gas fee. Gas is just a network fee that you have to pay in order to be able to process any transaction. And you can see here that currently on Ethereum network, gas costs 13 Gwei. I won't be getting into the details of it, but this is very, very low. During crypto bull run, when the network is congested because everyone is interested in crypto and everyone is buying and selling stuff and doing stuff on the network, this price goes up. It's a bit like Uber. The busier it is, let's say it's a New Year's Eve or I don't know, Saturday night, everyone wants to get an Uber because they have to go somewhere. The prices go up because the demand goes up. This is exactly how gas works. If the network is quiet, the prices are relatively low, and it may cost you like, I don't know, $1 or a couple of dollars to process a transaction. But when the network is really busy, this number may shoot up to like 200 Gwei or 500 Gwei, and suddenly even relatively simple transaction like exchanging tokens may cost you $50 or $100 or so. So it's really important that if you can, do all the transactions when the network is quiet. And certainly if you want to learn and practice, do it now when not many people are in crypto and the prices are low, because you can just try stuff and yeah, you will pay a couple of dollars here and there, but you can get that practice and gain confidence now when the market is quiet. You don't want to be doing all this stuff when it's busy, because then every transaction costs you much more money. And sure, you will still learn exactly the same thing, but you will end up spending much, much more. So yeah, that's just yet another reason why it's good to get into crypto right now. One last thing you should try is bridging crypto. And I won't be getting into the details in this video. I'll be making another one focused purely on this subject. But basically the idea is that bridging allows you to move assets, move crypto or NFTs from one blockchain to another. As I said earlier, there are multiple blockchains, multiple networks. They're not compatible with each other. So you cannot send Bitcoin to Ethereum address. At best, it won't work. At worst, you will lose your Bitcoin. So never try to do it. But with some tokens, you may be able to send the value of that token from one blockchain to another. And you can either do it on a centralized exchange, that's one option, but sometimes it may not be possible so you need to do it by bridging the asset. And you can do it within MetaMask. Like I said, there is a separate video that covers it in much more detail, but essentially the idea is that you take, let's say, Binance Coin or BNB on Binance Smart Chain, and you want to bridge it to Ethereum and exchange it for, let's say, Ether. And you can do it via bridge. Basically, you specify which token you want to use from which chain, to which chain you want it to go, and to which token. And then you will get an exchange rate and everything. It will cost you a bit of money, but that's the way to move assets between different blockchains. That's definitely something a little bit more advanced, but it's worth trying, because that's one of the things a lot of people will not know when they are first getting into crypto. So as there will be more and more people entering this space later in the bull run, a lot of people will be just starting, so they will know how to use Ethereum, or not even that. Bridging assets will be really confusing for them. And that's where you can often make a lot of money, because you can be there early there's less competition on different blockchains because simply fewer people know how to do it. In the previous bull run in early stages, I missed out on quite a few opportunities because I was quite confident when it came to Ethereum and Ethereum altcoins. But then there was an opportunity to get something on Binance Smart Chain and simply had no idea how to deal with it. Once I've done it, it was actually really, really easy. And yeah, once you do it a couple of times, it doesn't really matter which blockchain you're using. It's all pretty much the same thing. But until you gain that practice, well, it can be quite confusing, especially because you are dealing with money, and especially if you want to get into a project because you know that the price is about to go up. Because let's say a big influencer just mentioned it and you know that, okay, the price will start pumping, you are rushing things, and yeah, it can be really stressful and it's really easy to make mistakes. So don't do it. Make sure that you prepare for it well in advance. So that covers all the practical elements you need to know. The last thing is learning some additional stuff when it comes to crypto. So for example, you may want to check out things like launchpads. Launchpads are platforms where new crypto projects are being first released. So when you meet certain requirements, usually that means owning certain amount of a specific token, you can get into a project before it hits the market. So essentially you are getting it at a very, very low price. And there is potential to make a lot of money because essentially the price will likely go up quite a bit once the token hits the market. It's a bit like stock exchange and IPOs. This is a whole separate subject. Again, there are videos focused purely on that, but it's definitely something you want to look into. And even if you are not going to participate in the launchpads itself, very often the tokens of the launchpad project are the ones which are very valuable in the bull market because, well, essentially a lot of people will want to hold those tokens. Again, I will use CDFI as an example because it is a gaming launchpad. And basically the idea is that if you hold enough S-Fund tokens, you can then participate in those launchpads, in those like IPOs. You may not have enough S-Fund tokens to participate in them, or you may not be interested in participating in every single launchpad. But because those tokens are needed for people to participate in launchpads, in new releases, people tend to hold this project, which basically drives its value up. People tend to hold those tokens, which drives the value up. Because sometimes people will be just simply buying a token and then hoping it will go up a bit and then selling it. They don't actually want to hold it. Sometimes they don't even know what the project is about. But in this case, there is a very specific use case. If you want to participate in new IGOs, new IPOs, you need to have certain amount of S-Fund tokens locked in your wallet or staked. If you don't have them, you cannot participate in IGOs. So people will be buying those tokens and holding them to participate in launchpads, and that will drive the price up. So that's something that's good to know. And there are many different launchpads. There are launchpads on different blockchains. So that's one type of the project which you may be looking into. Finally, make sure that you have multiple sources of information. Again, it's a mistake I made in the past. I had just one source and I trusted a bit too much, which meant that, well, I've made some money on some projects, but also unfortunately lost some money. You definitely want to have multiple sources of information, and ideally ones which present quite different points of view, so you can then create your own more balanced point of view. So for example, you can follow someone like Alex Becker. He has 1.4 million subscribers on YouTube. He's really, really popular. And his stuff is focused pretty much exclusively on crypto gaming altcoins, and usually mid and low cap altcoins. So if that's an area you're interested in, well, you should definitely follow him because he'll be posting a lot of info about those projects. And also because of his following, or the size of his following, these projects will go up like crazy. On the other hand, you may want to follow someone like Benjamin Cowen, also huge following, but completely different approach. His videos are very, very heavy on technical analysis. He's focused mainly on Bitcoin, Ethereum, and large cap projects, and also stock market, S&P 500, real estate, and so on. So you won't see him talking about the latest meme coin or latest crypto gaming, micro cap altcoin, and so on. He's like almost complete opposite of Alex Becker, and also the way he delivers his video is very, very different. But that's exactly why I chose these two examples, because their content is very, very different. Their approaches are very different. And I think it's really valuable to look at those different points of view to create your own way of navigating this crypto market, if that makes sense. So that's it for this video. It's quite a long one and there's a lot of stuff, but like I said, you don't have to do everything straight away, but the more you do, the more you'll get comfortable with, the bigger opportunities you will have in the bull run, because you'll be essentially really well prepared for it. If you enjoyed this video, please hit the like button and subscribe to the channel, because there'll be a lot of new content coming over the next weeks and months. And also please check out my other videos in the description, because essentially that will give you all the necessary information how to put all this stuff actually into practice, how to test it all, how to do it all yourself. Finally, if you would like to save some time and have all the necessary information in one place, all the step-by-step guides, check out my courses. They start from $29, so price of a takeaway pizza, and you have all the information there. You can find them on my website, Crypto Like a Pro. Go to courses and you can find all the information there. If you have any questions, please put them in the comment section and I will do my best to either answer them or make a video about it. And as always, thank you for watching. I'll see you next time. Bye.